Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Really fascinating time for the markets, to say the least. Of course, last week we've seen gold break through the 1,400 level. Well, it closed right on 1,400 on Friday, and it's trading above it as we speak. But the real breakout was 1,350, which has been resistance on it now, going all the way back to 2014. It hasn't had it hasn't spent more than a week above 1,350 since 2014. So that's 5 years, and now we're doing it.
Is the tough talk between the U.S. and Iran a factor in gold going up?
I don't think it really is in in the long run, I think it's part of a big picture, but in the short run, the headline itself, I don't think really is playing a big role in gold going up. I think it's got a lot more to do with the Federal Reserve policy of preparing us for a loosening of monetary policy, a reduction of interest rates, and so forth. In fact, I was looking at the yield curve in the United States, the Treasury bond yield curve, when the short-term rates get higher than long-term rates, it gets inverted, and the 3-month interest rate on the Treasury bonds has been higher than the 10-year bond for several months. And historically, when that happens, gold starts to go up, and I think that's really what's driving gold. It's the outlook of monetary policy, and also how the U.S. dollar is trading against the currencies of other currencies around the world. And the U.S. dollar has been falling a little bit over the past week. It's now actually trading below its 200-day moving average. And I think if we think of that and what that might have to do with Iran, I think then we might just see a more meaningful impact. And what I mean by that is just the idea that global tensions will make gold go up. That also, historically, it's not actually proven to be the case. 2 years ago, when Trump was making statements of waging a nuclear attack on North Korea, gold just gapped up and then faded away. Even September 11th, didn't really influence gold prices that much. It just went up a little bit and went down over the next couple months, and then went up in 2002. So I think these geopolitical events have very little long-term impact. However, more meaningful is how other nations use the U.S. dollar. It's the world reserve currency, but by Trump putting these massive sanctions on Iran and the Chinese trade war that's going on between Trump and China, it's causing slowly other countries to look for alternatives to U.S. dollar to use. Iran is now being forced to do that, and China and Russia actually have been in discussions to do more of their trading in the Chinese yuan and abandon the dollar between themselves. Xi, the premier of China, went over to Russia last month, and they made public proclamations to these effects. So I think the Iranian tensions, if you put it in the context of the U.S. position in the world and the U.S. dollar, I think it's part of a bigger story. But the idea that, an attack or something happening to boats or shooting down drones, or even if Trump launched bombing attacks in Iran, and there's people who want him to do that, I don't really think that would make much of a meaningful impact on the dollar beyond a day or on the gold price beyond a day or two.
We'll have more with Mike Swanson right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mike Swanson. Mike, with this tough talk in the Middle East, is that doing anything to the price of oil?
Well, with oil, I think it has had an impact more so than on other commodities. But I think it's a short-term impact. So oil prices themselves, actually, they had a rally starting around December, that kind of came to an end in May. And interestingly enough, Trump announced sanctions in Iran, stiffening them, and there's now some sort of attack on a boat, a tanker in the Gulf. This was back in May, a Saudi tanker, and oil just gapped up and sold the news and went lower, down to $50 about a couple weeks ago. And then it did bounce back up when a second attack on those Japanese vessels occurred. But I don't, oil was at 75 last summer. The recent high was just above 65. It's now approximately 58. And historically, seasonally, oil tends to make a peak in July and go down into the fall. And it's just floating on its 200-day moving average. So I think, and we also are facing a likelihood of a global slowdown increasing. There is bad consumer confidence numbers out in the United States today. German industrial production numbers have really taken a big hit, and the Fed moving to lower interest rates is telling us they see signs of a slowdown. So I think the demand picture for oil is going to be slack for at least the next 12 months, and that's kind of hurting oil prices. And these events that hit the headlines in the Middle East, I think what they do is not create a massive rally for oil, but they help pop it up for a day or two, and then it ends up settling back down. So I think that's the ultimate environment that we're in, one in which oil's not really going to get a big bid on it probably till next year, but tensions can help, make temporary gap ups and 2 or 3 day rallies that slow a decline or make a decline that would have been bigger, not very big at all. If we break the $50 a barrel level before, let's say, October, then we're looking at probably $40 a barrel. It's not that big of a deal.
China is threatening to blacklist FedEx because of some kind of shipping mix-up involving Huawei. Is that just another issue that they'll have to talk about when President Trump meets President Xi at the G20?
Oh, definitely. I would take this as a warning signal that they're sending. Another warning signal that they've sent is last week, Xi went to North Korea and met with Kim. And, showing Trump that he's the one that's got the real leverage over there. And if we want something to be done with North Korea, he's going to have the Chinese help. But this is going to be a key week. This coming weekend, there's that G20 meeting. There's supposed to be some sort of side meeting between, China and the United States with Trump and the Chinese premier. And this is really the last chance to see if some trade agreement will be made or if more tariffs that Trump threatened to make, back at the end of May materialized. And, when we went through this at the end of May, the stock market pulled back about 7% on the S&P 500 for 2 or 3 weeks. Then, of course, we rallied when talk of coming interest rate cuts popped into the market. I wouldn't be shocked if June or July, doesn't see a repeat of this situation where nothing good comes out of the G20 meeting and stocks, sell a little bit on that news. But then by the second half of July, we'll have quarterly earnings reports for traders to buy into, and also the end of the month Fed meeting, in which the Federal Reserve is almost certain at this point to lower interest rates, especially if there's a negative outcome at that meeting. So people are going to buy into that. So you think right now, since the market has sort of been in a rally mode for this month so far, people have kind of forgotten about the risks in the stock market and almost complacent about this trade meeting. But I don't really think there's any reason to think that some big deal is going to be made at this event. So people need to be ready for that. However, in May when this happened, gold also had a bid following the collapse of that trade discussion. So I really think this is just another reason for people at this moment to own gold. It's broken through that 1350 level. That's a base that's been in place for 5 years. And I think we're just going to go up. We have the fundamentals and the story, reasons to buy gold. And, but now we have the charts. And when you have big rallies, they really have 3 phases to them. The first phase, I would say, is what's taking place from October till probably now with gold above 1400. That's where almost no one is interested at all. Even so-called gold bugs they're not even interested because they've been burned in the past 5 years with rallies that faded. So all you really get is insider buying, and in the futures market, commercials buying, and in the producers. And interesting enough, in the silver market, they went net long for only the 3rd time in 30 years before this move even happened. In the month of May, they did that. So that's a sign of that first stage where no one really cares. And the second stage, though, I think is where we are now, and it can last months to even years. And this is a stage in which people look at the charts, and they trade based on that. They say, oh, the price levels are taken out. I'm going to buy. These may be people that got trading tactics or investment tactics, and they get involved in the markets more and more as it goes higher. But even at the beginning of that phase, the general public is typically not involved. And that's where I think we are at this moment with gold, where, people who watch the market is getting more and more involved every week, chart readers, traders, and so forth. But if you look at Robinhood, which is one of the most popular now brokerages in the United States, they list the 100 most popularly owned positions, 100 of them. And there's only one single gold stock on the list of 100 stocks. That's Yamana Gold. And that stock's been on the list all year. So there's been no additional stocks added to that 100 list, even over the past couple of weeks. GDX isn't on the list. JNUG isn't on the list. None of the gold ETFs are on the list. This is a sign to me that the masses are not involved. And also I'd note, if you watch CNBC, even with its move, there's very little discussion about gold. This isn't because the people on CNBC that you see on there are stupid. It's because the people who produce these programs know that the masses aren't interested in that yet. That's why in 2017, when Bitcoin went up to 20,000, you could turn on CNBC and see, within a minute or two, you'd be hearing someone talk about Bitcoin. That's because the masses demanded that, and they gave it to them. But they're not in the market yet. That's the third stage, is when they get in, but we're years and years from that happening. So, this is a way to say that we have had a nice rally. On a percentage basis, many of the stocks have made big moves in just the past 6 weeks. And it's tough to chase and buy something when there's big moves going on. However, I think the move is only starting. So it's a matter of waiting for a pullback to buy, waiting for consolidations and individual stocks to buy. And the thing is, in the gold mining world, and silver too, for that matter, there's hundreds of small cap speculative stocks that have not broken out yet. So I think this is a really good time for people to pick out the best of those and start to put money to work. So that's kind of what my intention is for the rest of this year.
That means doing a lot of homework, doesn't it? Finding out about individual companies and who's got the best prospects.
Oh yeah, I mean it's easy to buy an ETF like GDX or whatever, just press the button. But when it comes to the small cap stocks, it definitely takes some work. Or going to websites such as House Street, listen to your show, the guests on it, because those are the people doing the homework on it.
We'll have more with Mike Swanson right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp, RMO on the TSX Venture Exchange. Rainy Mountain Royalty Corp is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, anything going on with agricultural commodities?
Yeah, it's an interesting setup. Typically, first of all, I'll say I own a position in that sector or asset class through the DBA ETF. However, I own it as part as a diversification strategy in my portfolio. I don't think it's going to go up like crazy, at this moment. However, it's part of the commodity complex. And historically, when commodities go into a bull market, it starts with gold, which I think is what we're seeing. And then silver breaks out after gold, and silver really hasn't broken out yet, like gold has. Silver is still below its high of the last 5 years. And then typically the agriculture commodities break out either with silver or after silver does. So in 2002, for example, gold broke through $300 an ounce, which had been resistance for several years, but silver didn't break out for another year. It was like 12 months after gold did. And the agriculture commodities as a whole also broke out 12 months after gold did. So I think we're seeing a major bottom likely has been put place in agriculture commodities across the board in them. And I think they can go up. However, it may not be for another year that they really start to go up dramatically, and same may be with the price of silver. However, you can't be too bearish on these things, especially silver, because the setup's a little bit different than 2002. It's closer to breaking resistance. It doesn't look like it's going to take 12 months to do it, or at least have a rally up to $20 or something. That could easily happen before this year is over. But one thing about the agriculture commodities that, I'm watching them actually fairly closely, because the DBA ETF, has rallied up to its 200-day moving average after having a big tumble, in the first part of June, in May, when that trade situation with Trump and China blew up. The agriculture commodities took a big hit along with the stock market, but I think they have likely put in something of a crash bottom for that bear market that they've been in since 2011. Talking about an 8-year bear market for them. And they fell in a really sharply in a short amount of time. And then we also have had all this bad news about the crop situation in the United States that helps to put a floor on them. So we bounced back up to the 200-day moving average on DBA, also RGA, which is another popular commodity ETF. And it looks like we're pausing there. And I'm going to be curious to see what they do next week after this next G20 meeting. Are they going to rally? If they do, then I think they might be breaking out to have a good rally for several weeks. Could be a 10% gain in these ETFs. However, if they don't, then they might, roll over and fall again like they did after the last trade situation or confrontation to make a final double bottom or something. So I think we're at an interesting short-term trading moment for these things next week. So I'm curious to see how they're going to play out.
What's happening with Bitcoin right now?
Well, I mean, it's rallied up to about, I think the last I checked was 11,000. It's about 11,000 right now. So I don't really know the actual reasons behind it. I'm not really an expert on it. I just can look at the gyrations and whatever. So I mean, the Bitcoin people are telling you that it's going up because the U.S. dollar has fallen and gold is going up, and it's going up with gold. Others will tell you that it's going up ahead of this Facebook announcement, and so forth. And, you look at the chart, it's obviously, had some sort of consolidation base for several years and broke through it. But I don't know what the real value of the Bitcoin is. And the idea that Facebook is a positive for it, because Facebook announced they're going to make something called a Libra coin, makes no sense to me, because if the Facebook coin is so great, then why do you need a Bitcoin? So, but it's definitely a moment of final relief for Bitcoin people where, it's been able to get above 11,000. But I don't know, on the other hand, historically I've looked and there's absolutely no a relationship between Bitcoin and the U.S. dollar at all. The Bitcoin doesn't go up when the dollar goes down like gold does. In fact, the closest relationship Bitcoin has to another market is the NASDAQ. So I think Bitcoin's actually an instrument of speculation, that when stock market investors get real excited, some of them nowadays, instead of buying more Facebook or Apple, and those stocks have sort of been lagging all year, some of these people now buy Bitcoins or other cryptos, especially investors that got the apps like Robinhood. You can buy these coins on there. So I think it's really an instrument of speculation and a sign that people are complacent in the financial markets, that this recent stock market rally that began in December and after the last 7% dip is, popped back up, has just gotten people more and more excited. And the idea that the Fed's going to lower interest rates has them even more excited. So I think that's the real reason Bitcoin's going up. Just, more desire among people to speculate, because I don't think it's a safe haven, at all. There's no, relationship between Bitcoin and the U.S. dollar like there is between gold and the U.S. dollar.
With Facebook talking about their own cryptocurrency, would you invest in that?
Well, I think to do that, you're investing in Facebook, the company, not the cryptocurrency. And, I don't really think Facebook at this moment is a great stock. It's lagging the other stock market averages. Of course, it fell a lot, last fall, but it's still way off the highs. And I think fundamentally, it's trying to pivot and change direction. It's got to deal with the possibility of regulations coming from Congress that would regulate it as a media company, which is what it really is. But there's signs that the business itself, at least in the United States, that the Facebook website has kind of become saturated, that there really isn't much more growth for it to have. Everyone that can be on it is on it, and some people over the past 2 years have been spending less and less time on it. And Facebook has actually announced about 2 months ago that it was going to change the look of the entire website because of this fatigue factor. They haven't done that, but I take that maybe they will do it. But either way, I take the idea that they were planning on doing it as a sign that they are looking to reinvent themselves. Of course, they've got Instagram and they buy other companies out, but I think the Libra coin is just another attempt, to try to become PayPal or something else to reinvent themselves. So, I think the company's entering a period of transition, and it's not clear exactly what that's going to amount to. And it may be that the Libra coin is just something they're sticking up on the wall, with maybe 12 other things that will come down the pike, and we'll see if something really sticks or not.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.